Jeffrey Bacha, it's been a tough year for biotech stocks, but there's a little bit of good news for you and your company, DelMar Pharmaceuticals. You were uplisted on the Nasdaq this week. So what does that mean for DelMar?
Well, it's really an important milestone for us. When we started the company back in 2010, making sure that we had the access to capital to bring a product all the way through approval was a key component of our strategy, and the listing on the national exchange on the Nasdaq really positions us to be able to do that.
And you have a drug to treat aggressive brain cancer, and you're heading into a phase 3 trial. How does your treatment differ from what's already on the market?
So it's really the mechanism. The way our drug attacks the tumor's DNA as a chemotherapy is different than the way the current frontline therapy, a drug called Temozolomide, attacks the tumor. And because the mechanism is different, the things that make most patients fail or be resistant to that drug Temozolomide doesn't affect our drug. So that's the promise that we bring.
All right, and what's the timeline for this particular drug?
So we announced the completion of a phase 2 study early this year at ASCO. So we're positioning to move into a pivotal phase 3 trial later this year. It'll take us about a year to enroll that trial, give or take, and about a year after that, so roughly 2 years from the end of this year, so late 2018, we should have data and hopefully seek approval.
And how transferable is what's going on in your brain cancer treatment to what you're doing in ovarian as well as lung cancer?
Right. So again, it's all about the mechanism. So the business model here is to take a drug, VAL083, that happened to be studied years ago at the National Cancer Institutes and has evidence of activity in a number of different cancers: glioblastoma, lung cancer, ovarian cancer, others. And as we study the mechanism, be able to plug it in where that mechanism directs the old clinical success to solve a problem today. So understanding the mechanism, differentiating that from standard of care, solving a problem and running at it as quickly as possible, that's the business model.
And do you have the money to get you there? I think after your last capital raise, you got about $8 million in cash. What's your burn rate? Can you get to a drug on the market? Are you going to need more money? Are you going to need a partner? How are you going to do it from the financial side?
So our burn rate has been relatively modest. It's about $1 million a quarter historically. Of course, as we move into a phase 3 study, that's going to go up. So we can say we have 2 years of burn in the bank at the moment. But once we have the phase 3 study finally designed, we'll look to go out and raise the capital to do that, either through the public markets or through warrants exercise that's in the money or through a partnership.
All right, well, thanks a lot for coming on and talking about it. Jeff Bacha.
Thank you very much.
And thank you for watching The Street.